You were listening to ChartingWealth.com for Thursday, the 9th of March, 2017. We see stocks mixed today. The S&P 500 down, QQQ up for the day. In fact, SPY was down 0.19%. QQQ, which represents the NASDAQ 100, up 0.18%. We see bonds down a little over 0.5% at 0.54%. And gold down 0.62%. Let's jump right into the S&P 500. What do we see going on? Well, the PPO is headed down toward the signal line. Hasn't crossed over going down yet. Has penetrated the two-day trend line. Still above the weekly trend line. Derivative oscillators losing energy. Again, if we look at the 2-hour chart, we can see that it has been going down since it crossed over going down at 10 a.m. on the 3rd of March, and it has continued to move down. In fact, moved down even stronger toward the end of the day. Huge long wick at the end of the day, recovered some of that, and again, starting at about noon on Wednesday, it penetrated the two-day trend line. So continuing to rocket down again. Don't have a rotation over yet on the two-day chart. Does look like it's getting close, but has not happened. So that's where we are on the S&P 500. Let's take a look at what's going on in depth in the Qs. 0.18%. It was up for the day. This closed out the two-day candle. We have two two-day candles, which are basically spinning tops, lots of indecision. We do see getting ready, it appears, to cross over going down. Derivative oscillators lost a lot of its energy, and the PPO, the price percent oscillator, looks like it's getting toward crossing over. We have penetrated the two-day, still above the weekly trend line on the Qs, still trying to hold itself up. What do we see going on? Well, tried to cross over on the 2-hour chart going up, but rebounded off of that late in the day. We do see the derivative oscillator on the 2-hour trend line up. So we'll continue to watch. I mean, again, if it penetrates over and starts moving up again, all things being equal, particularly if it's above the two-day trend line, and you see things rotate over in the morning going up on the Qs, could be a sign to consider jumping in. Remember, weekly chart still moving up, two-day chart still moving up. Your practice trading, you might as well check it out, although it is a long, long, long run at the end of the days, at the end of the many weeks, 2 months on the Qs of crazy, great up movement. And we have been very happy and very proud as to when we originally called that all the way back on, what was that, around the 9th? Yes, the 9th of January. So we've seen some incredible appreciation somewhere around 121, 122, all the way up to right at 132. So some good moves up on that for us. But again, keep an eye on that 2-hour chart if you want to do one of those shorter chart trades that might make itself available on Thursday. We don't know. Remember, we trend follow. And when we have the weekly and the two-day both moving up and the 2-hour rotates over, although we can look at that two-day chart and it sure is getting close to crossing over going down, but it did the same back in, early January, and then bounced off. So, and that was prior to the weekly crossing over, the weekly vertical crossover. So we're still in that mode. Keep that in mind. Okay, let's keep moving through these charts. We're going to TLT. What is that? That's the 20-year bond. It has gone down hard. The candle has now closed on the two-day chart. Rotation over along with the derivative oscillator flipping over. So we are in a confirmed down move on the two-day chart. There would be no getting in at this point. Two-day chart's confirmed down, while as the weekly is still up. We don't have a trend line on the weekly because it never allowed us, it allowed us to draw some back. And if you actually did draw weekly ones, they were well broken. It was just extremely hard to even draw one, though, because it was so flat in that movement. We did have some trades, some good trades on TLT, but they were short-lived as far as that weekly vertical crossover went. We now have 3 strong down candles on the 2-day chart, and the 2-day trend line was broken all the way back on the 2-day candle closing on Thursday, the 2nd of March. So confirmed down, just had the crossover occur. It is closed out, confirmed down on that the medium range chart. Now, if we look at the short chart, that would be the 2-hour chart. We can see there was lots of strong down movement at 10 a.m. in the morning. That was the first candle of the day, and then tried to bottom out and recover a little bit. So we are confirmed down on the 2-day and the 2-hour chart. Now let's go back to that 2-hour chart. Look at our last chart. Gold down 0.62%. Gold also 3 big down candles. It also confirmed crossover. Derivative oscillator crossed over, well, right about the same time that second down candle was forming, and we have again a confirmed down move. We've actually on gold penetrated the weekly trend line also, so we are crossed over confirmed down territory as far as the 2-day chart goes. If we take a look at the weekly, we can see it has substantially weakened also. It's actually tipping down on the PPO, and derivative oscillator has been losing energy since it topped out on the 24th of the week ending the 24th of February. So that's where we are on all 4 of our indexes. We so appreciate you being with us. If you have not already signed up for our newsletter, why are you not doing so? What do you get with that? You get our How to Read a Stock Chart video, which is what you need to start understanding what it is we do here at chartingwealth.com. We do just that. We help you chart your wealth in virtual trades. We want you to go open up a virtual trading account at any of the online brokers, then start listening to us on a daily basis. Fill out the daily market worksheet that we will send you along with your subscription, along with the How to Read a Stock Chart video. You get the daily market worksheet, the weekly market worksheet. Our website tells you how to fill those out and why they are extremely important to putting your training into supercharge mode. You'll also get the layout that we use at freestockcharts.com. The operative word here is free. It doesn't mean that it is worthless. I would argue that it is priceless. And we so appreciate our friends at freestockcharts.com. Everything we provide you is for your benefit. We ask you to spend 10 minutes a day with us. That's it. If you will spend 10 minutes a day trying to understand these charts, working it up slowly, listening to our training videos, filling out your daily market worksheet as you listen to us, thinking about what it is you're doing, putting pen to paper, anyone can tell you that that is an almost magical way for the human mind to work. Humans have been writing for thousands of years, and being able to transfer that knowledge onto paper and see it and hold it is so much different than typing something into a computer screen and saving it and having a record of what it is you've done. Folks, it is unbelievably powerful. And we do this for you. We want you to understand what it is we do. Understand that price movement, what you see on these charts, is not what you hear on the news. It's not what you see in the press. It's what's really happening in the market. There's a saying on Wall Street, buy on the rumor, sell on the news. What does that mean? Well, that means that things happen without them being in the news, and everything happens beforehand. Once the news comes out, it's too late. The people who are in the know, and I'm not going to say insider trading and all that, it's like anything else. If you're up there on Wall Street, if you're in the markets, if you're paying attention, I mean, everybody listening has other things to do. So what do you do in order to figure out how these markets work? Well, what you do is you watch price movement. And the beautiful thing about the world we live in is we have things like freestockcharts.com that shows us the price movements during the day. And when you learn the charting techniques that we teach you that are nothing but common sense and reasonableness. We use Occam's razor. Basically, we keep it as simple as it could possibly be. And what we do is we backtrack, we look at things that worked in the past, we use charts that work. When charts don't work anymore, we stop using them. If there's certain ETFs, if gold started to be unchartable, then we wouldn't chart gold anymore. If TLT was not chartable accurately, we would get away from it. And there's certain times of the year when charts work and don't work. That's what we explore. That's what we learn. That's what this is all about. And if you really are serious about learning to trade, if you really want to make money in the market in the future, you need to train now. We're not a stock calling service. We don't tell you to go out and buy and spend your money. I get emails all the time from people, oh, I just bought 20-year bonds and it looks like it's going to keep going up. What should I do? The first thing I do is say, you're asking the wrong guy. We are an education firm. We are here to help you learn to make your own decisions. And after you get really good at this, and you learn all sorts of things from us, from books, from others, from however, the School of Hard Knocks, and you practice, and you get good at doing this, then and only then can you make up your mind to use your own money. And I'm telling you, nobody cares about your money more than you do. And that's what we're here about at chartingwealth.com, is teaching you to understand how these markets work and how to read a stock chart. That's where the power is. My friends, thank you so much. We appreciate you being with us. God bless you. Have questions, problems, concerns? Always go to chartingwealth.com. You can write us CW at chartingwealth.com. We will attempt to answer you. If you're asking for advice on real-life trades, we will not give it to you. That's not what we do. But we'll sure help you learn how to read these charts. Thanks so much. God bless from chartingwealth.com.